So when we're talking about income, what are we talking about?
Total amount of money you make a year.
Not even that specific. It's really just.
You get paid like an hour or
Yeah. So not even like specific time frames. It's just amount of money that's coming in. The money coming in. That's it. But yeah, you can talk about your income in terms of an annual salary or an hourly wage or a monthly wage, whatever it is. But really simply, income is just incoming money, money coming in. And then you can open that up to the inside. So let's just break it down a little super simple. If you get a job, what does that make you?
employee.
An employee. Perfect. And if you're an employee, what else do you have? Yes, but also, what else do you have? What's another word for when you're talking about superiors? Another word to describe boss. What is it?
Employer.
Employer, exactly. So if you're an employee, you have an employer. And the employer is the company that is paying you for what? What are they paying you for? Your work. For your work, for your labor. And again, the money that you earn at your job is your income. But you do not get to keep all of the money that you earn. Yeah, we're going to get there. So part of your money goes to the government, which helps pay for roads, schools, infrastructure, the military, all kinds of things. And yeah, like Gael said, there is gross income. And gross income is the amount of money that you make before you subtract out taxes and insurance. So all the money you earn before you subtract taxes and insurance. And insurance doesn't always get subtracted out because some employers do not pay for insurance. So that wouldn't be taken out of your paycheck. Then that would be a separate transaction. So you would have income and then you'd have to pay as one of your monthly bills. You'd have to pay for insurance. But most, I won't even say that, a lot of employers pay for insurance or pay part of your insurance. And it's all, so when I get my paycheck, there's a portion of it that's taken out that goes toward my dental and my vision and my medical insurance. And that's taken out before I even see it. But then I also get a certain amount that I can deposit into my bank account. What is that income called? So there's gross income, and then there's also, what's the other word? Net income, exactly. So net income is all the money you earn minus taxes and insurance. Right? And we're going to talk a little bit more about taxes. Find your the one that looks like this. Taxes. And there's 4 different categories of taxes. Can you guys think of any of them? Okay.
State tax.
What did you say?
I said state tax.
Not state tax. But there are, so when you file taxes, you have to file taxes within the state that you're in as well as the federal taxes. So I see where you're going with that, but that's not one of the, and that would be looking at like a certain category of tax. Can you guys think of any types of taxes? Any ideas?
State.
That's what we literally just talked about.
Income.
Income, good. Let's put that here. 3, income tax. Yeah. So there's income tax. What other kind of tax? Nope, that's not taxes. Taxes are specifically, this is money that's going into the government that's paying for goods and services that we all use. It's another type of tax. There's a tax that you guys, I know, have experienced before. Sales tax. Like when you go to Walmart and you buy something there and you buy...
It's 99 cents plus tax.
Yes, so it says 99 cents, but you don't pay 99 cents, do you? You have to pay a little bit more than that. That's because of sales tax. Okay, think about real estate. What are you buying and selling if you work? Yeah, so property tax. And then this one is payroll tax. And let's explain those a little bit more. So flip to the inside. So payroll tax, that's going to be money withheld from a person's paycheck by their employer. Money withheld from a person's paycheck by employer. And there's 2 parts to this. There's Social Security, which comes back to you eventually. And there's Medicare. And Medicare is set up to help with medical costs for people who are 65 and older. And then there's property tax. Property tax is money paid to government, and I'm going to abbreviate government, GOVT, based on property owned. Usually it's due once a year, so you pay it once per year. And it pays for police, schools, roads. For police, schools, roads, etc. And property tax stays local. So, and you're paying it based on the value of the property that you own. So people who live you know, in $40 million houses in Telluride are paying much higher property taxes, but that money stays in Telluride versus here, the average cost of a property in Montezuma County, I don't know it off the top of my head, but it's going to be lower than that. So therefore, there's lower property taxes, and that money stays here. So it stays where it's at. Income tax is, again, money paid to the government. Based on your personal income. And the more income you make, the more taxes you pay. And then finally, sales tax is, again, money paid to the government. On goods and services sold. And it's based on a percentage. And that percentage varies depending on where you purchase. And also on what you purchase. So state to state, the sales tax varies. But also there's higher sales tax on cigarettes and alcohol as a way to dissuade people from using those types of things. I think they put like a higher sales tax at like tanning beds because they realize that it's really bad for people's health. So they put a higher tax on it to try and keep people away from buying it so much.
Why not just make it how sometimes shipping is advertised where it's listed like the actual price is like $1 and then like the tax is like 99.
Yeah. And again, taxes in general are just money paid to the government.
Wasn't there at one point in time when everyone in the United States was afraid of the Martinsburg Monster?
Of the what?
It was a giant. It was the Martinsburg Monster is the nickname given to the computer system of the IRS.
Yeah.
Oscar.
Yeah. And what is the IRS? What does that stand for?
Internal Revenue Service.
Yeah. Internal Revenue Service. And that's just the department that is coordinating all of this.
Yeah.
Okay. We'll go on to methods of payment. Methods of payment. Probably the last one. Okay. So there's 5 different methods of payment. Can we name one? There's 2 different types of cards. Yeah, debit card and credit card. What else do we have? Cash. Check. Nope. This one's called EFT. Electronic Funds Transfer. So this is give another definition of it, but it's when funds are transferred electronically. So you're not actually dealing with a banker person.
Yes, PayPal is a good one.
Yeah. So yeah, like PayPal and Venmo and Cash App, but also like wire transfers between banks, also like direct deposit. So you can give your banking information to your employer and then your money just shows up in your bank account. You don't have to take your check to the bank.
Speaking of transferring money, I find it quite ironic that the systems put in place to prevent money laundering schemes actually end up being more of an inconvenience to people who aren't doing money laundering than stopping money laundering. Same thing with piracy. Anti-piracy measures usually harm the consumer, legitimate consumer pirates, because piracy is created basket. I should know, because I am one.
Okay, cash is just currency or money. Described as bills or coins. Check is written, dated, and signed. Written, dated, and signed piece of paper. Which directs a bank to transfer a sum of money. So directing a bank to transfer a sum of money. A debit card is a plastic card that allows the owner to transfer money from their bank to another bank. So it's your money that allows the owner to transfer money from their bank to another bank. A credit card is also a plastic card, but it works a little bit differently. Does anyone know what's the difference between a debit card and a credit card?
Debit card you pay like immediately. Credit card you can like hold off and pay it off later.
Yeah, so exactly. So a debit card is your own money. So it's just the same as taking $20 out of your bank and giving it to, you know, whoever you're paying $20 to.
So basically like just carrying around $20.
Yeah, exactly. Exactly, but in a piece of plastic. But a credit card is borrowed money. It's not your money. And you have to pay it back. Well, no, not necessarily. If you pay, you can pay off your credit card. And if you pay it off before the end of the month, then it's just like using cash. It's the exact same thing, except for that you're building credit. But if you don't pay it off at the end of the month, then what happens is interest starts to accrue on the amount that you took out.
The way I interpret that statement of it's like you pay twice is that you pay for the thing you buy and then you pay for the card.
So it'd be like if if I wanted to just go to Walmart and buy a new MacBook with a credit card, I could buy that, and then if I went home and I transferred money from my bank to pay off the credit card, then nothing bad happens to me. I gain points on my credit card, which I can use toward buying a flight in the future, and it looks good on my credit report. But if I go and buy that MacBook and then I forget about it and I leave that credit card sitting around and I don't pay it off for a year, I'm going to owe probably, I don't know, I can't do that kind of math in my head, but you get 25, it's around 20 to 25% interest every month. So after a year, you're going to be paying a lot more than you just originally paid. So that's the thing to remember about credit cards, and we'll talk about this in a lot more detail later, but so they do have limits based on your credit score. So when you can put these away. We'll pick back up with this on Monday. But